You can build serious wealth trading the Indian markets, or you can see your entire savings wiped out in an afternoon. The difference comes down entirely to discipline. In the next 6 minutes, we are going to build a concrete 4-month progression roadmap, and you will execute your first mathematically perfect paper trade. To start, you need 4 things: your total intended starting capital, an emergency fund covering 6 months of living expenses, a free trading simulator, and a blank spreadsheet. Retail trading has a massive failure rate. We survive that by completely removing emotion and relying strictly on a rigid mathematical system. This comparison matrix outlines the 3 trading landscapes we will conquer. Indian equities trade Monday to Friday from 9:15 a.m. to 3:30 p.m. with medium risk. Crypto runs 24/7 with extreme volatility. Legal Indian Forex is restricted to 9 a.m. to 5 p.m. Your starting capital must be strictly divided: 70% to equity, 20% to crypto, and 10% to Forex. We stretch that allocation across a 4-month progression. You'll spend the first 2 months in paper-traded Indian equities, building muscle memory without risking a single rupee. Only in month 3 do you allocate that 20% to the crypto market, eventually progressing to small-cap crypto once you understand the extreme volatility. Month 4 introduces your final 10% to strictly INR-based Forex pairs. We sequence these asset classes by regulatory complexity. Taking it step by step prevents a simple beginner mistake from wiping out your initial capital in these volatile markets. Open your trading simulator. Go to the settings and manually adjust your virtual balance so it matches the exact amount of real money you intend to deposit later. If you plan to start with 50,000 rupees, do not paper trade with 10 lakh. Practicing with unlimited fake funds breeds reckless habits that will destroy your real account. The 1% rule. Position size equals 1% of capital divided by entry minus stop loss. With 100,000 capital, your risk is 1,000. Entering at 500 with a 480 stop loss makes a 20 rupee risk. 1,000 divided by 20 equals exactly 50 shares maximum. You calculate this exactly every single time. Sticking to this specific math ensures that even a string of consecutive losses won't ruin you. It turns trading from a gamble into sustainable business management. Now, let's place the trade. On the order ticket, ignore the market order option. Select Limit Order so you dictate the exact price you are willing to pay. Before you click Buy, define your exit. Your entry and your stop loss must be entered simultaneously. A stop loss is a mandatory safety net, never a decision you make later. Once the trade executes, log the date, entry, exit, and your reasoning in your spreadsheet. With your mechanical process built, we have to clear a crucial compliance checklist before you ever touch real money. If you trade crypto in India, the government takes a flat 30% tax on all gains. You cannot offset this with your losses, and exchanges will automatically deduct a 1% TDS on every major sell transaction. In the Indian stock market, stay entirely out of the futures and options segment. SEBI data confirms the vast majority of retail F&O traders lose their capital. Master the cash equity segment first. Finally, trading international Forex pairs through unregulated offshore brokers is a direct violation of FEMA regulations. Indian residents are legally restricted to trading INR-based pairs through SEBI-registered brokers. You can predict the market perfectly, but ignoring these specific Indian legal and tax frameworks will drain your account before you ever see a return. That is your system locking into place. You've successfully executed a risk-managed trade and laid out a compliant roadmap for the next 4 months. Now, the real work begins. You must repeat this exact process, calculating the math, placing the limit order, and journaling the results in your simulator every day for 4 to 6 weeks. True market readiness is proven only when you can mercilessly execute your own stop-loss rules without hesitation. Stick to the roadmap, protect your capital, and let the math do the work.